Hi. New figures from the Australian Bureau of Statistics show that Australia's richest households are expanding their wealth 3 times faster than the poorest groups. Hi, I'm Michael Yardney, and if there's any doubt in your mind of the value of property as a creator of wealth, these figures clearly reveal that a substantial amount of Australia's wealth is tied up in home ownership. Now, Melbourne's households are on average the richest in the nation, followed by Perth, Canberra and then Sydney. Sydney's actually been knocked off its perch home to more Australian wealthy families. Before I go on and explain this in a little bit more detail and what it means to you, I'd like to quickly remind you about a great book I wrote a short while ago called Thriving, Not Just Surviving in Changing Times. And this is just as relevant today in our very turbulent times. We've got some changing times ahead. This book teaches you about the rules of money, the psychology of success, the myths about money that you've got to put aside, and the rules that you need to be thriving, not just surviving in changing times. Click on the link below and get your copy now. Now, we're talking a bit about wealth and the wealth in Australia, and currently there's all these protests against greed going on around the world. So let's first look at how the rich are getting richer, and then I'd like to share some of my thoughts about the importance of money and its relationship to true wealth. Now, across Australia, the average value of households in 2009-2010 was $907,500, and the average household owed debts of about $135,700. What that means is that the average net worth of Australian households was $771,000, up from $591,000 a few years ago. But when you dig deeper into these figures, it reveals that the rich experienced a far more rapid increase of their wealth than the poor. The gap's getting bigger. So you see that wealthiest 20% of households had an average net worth of $2.23 million in June last year. That was up about $300,000 or 15% from 2005-2006. The middle class, they're also doing better, and their average wealth went up about 14%. On the other hand, the Bureau of Statistics figures showed that the lower end, the lowest 20% of households in Australia accounted for only 1% of the total household wealth. They had an average wealth of about $32,000, up just 4%, up only $1,000 from 4 years ago. Now, not surprisingly, the family home was the biggest contributor to household wealth in Australia. The stats showed that about 2.7 million households owned their homes outright, and those who had a mortgage, their houses were worth about $521,000. Those without a mortgage, their houses were worth about $541,000. Those with households that had superannuation, they had about $154,000 of superannuation. But for half of these, the value was less than $60,000. Interesting spread, isn't it? Okay, where did our rich people live? Households which had more wealth were more concentrated in our metropolitan areas. Melbourne households were the wealthiest, with a net worth of about $866,000. Then there was Perth, Canberra, Brisbane, Darwin, Hobart and Adelaide. Now, Sydney was actually the fourth. On average, the Sydney households had a net worth of $766,000 last year. Now, it's the first time since the survey began in 2003-2004 where the Sydney average was less than the national average, and then it was behind the other capital cities. Now, why was this so? I guess it can be explained because of the poor performance of the average Sydney house price over that time. Now, sure, it's changed, but in the last few years prior to this survey, Sydney houses were Sydney houses didn't go up much in value for a while, did they? On the other hand, properties in Melbourne increased $100,000 and about $150,000 in Perth. Anyway, what this shows is the importance of home ownership. It should come as no surprise that owner-occupied homes were the main asset held by Australians. While the number of Australians that own their own homes outright, without a mortgage, fell slightly to 32.6%, the Bureau of Statistics figures confirmed a strong correlation between net worth and home ownership, with mortgage-free households being almost 2/3 wealthier than the rest. Look, there's no question that these figures reveal a substantial amount of Australia's wealth is tied up in home ownership, and this has led a number of groups to argue about the inequality of the system or the lack of capital gains tax on our homes. I guess some are saying, isn't this uneven distribution of wealth unfair? Now, I know that currently there are protests around the world about the uneven distribution of wealth and how the greed of some companies and even some countries has got the world into the financial mess it's in today. Now, these people have got some very valid arguments, but since you've taken the time to listen to this, watch this video, I'd actually like to give you some of my thoughts on wealth for what they're worth and some of my philosophies on money and wealth. Look, first let me set the record straight. Money is important. It helps you get through life, but money doesn't equate to wealth. Money is important in those parts of your life where it works, like paying the bills, and it's not at all important in those parts of your life where it's not essential. To me, to be truly wealthy, you need a lot more than just money. Let's face it, to be prosperous you need things like family and friends, health, time to appreciate your life, personal growth, spirituality, and I know that means different things to different people, and very importantly, you need contribution. In my mind, contribution back to the society that's helped you become wealthy is critical. Rich people are not necessarily greedy, like some believe. Have a look at the ultra-rich. Warren Buffett has donated a vast majority of his wealth back to society, as has Bill Gates. And there are many examples of generous, philanthropic people much closer to home. One more thing. Wealthy people recognise that it's not an either-or equation. You can be rich and happy. You can be rich and generous. You can be rich and good people. While others believe they have to choose between money and other aspects of life. Therefore, they've rationalised a position that money is not as important as other things. Let me ask you a question. Just because I own an investment property, does that stop you owning one? Does it? There's enough of everything to go around in this lucky country we live in. Rich people live in a world of abundance while the poor tend to see limitations. My own observations are that many of those protesting about distribution of wealth look at other people's success with resentment. Some are even a little jealous. Others seem to believe that rich people make them, the others, poor. The problem is that if you resent what other people have, you can never have it. If you view rich people as bad and you want to be a good person, then you can never be rich. How can you become something you deride? Now, I can understand why some people think all of this is unfair, but they should remember that currently over 2/3 of Australian households own their own home, either outright or with a mortgage. And the fact is that when these Australians bought their homes, prices seemed expensive to them. However, they were disciplined, they saved, they got a deposit, they took on a financial commitment of a home, and then they allowed the magic of compounding, leverage and time to grow their wealth. The bottom line is, if you want to grow your financial wealth, you need to get a foot on the property ladder. Look, yeah, the economic times are uncertain at present, and you can't just buy any property and become rich. In fact, in turbulent times like we're now experiencing, I think fewer investors are going to do it well. But those who buy the right properties in the right locations and finance them correctly, they're going to grow their wealth, just like all the millions of other Australians have before them. Remember, as a long-term investor, and look, that's really the only way you should be as an investor, long-term investor. You can buy property at any stage in the cycle as long as you get the fundamentals of that particular deal right. This year may be a good time for you to buy a property. You know, I've always found that it's a good time to buy when everyone else tells you property is a bad investment. Now is the time for you to get set for the future. And I'm going to keep you up to date in regular updates like this in my future updates. But it's probably not a bad time to explain that in these changing times like we're experiencing, no one can quite help you like the independent property investment strategist at Metropole. It's great having a team like Metropole on your side to get you to where you want to get to financially. Remember, the multi-award winning team don't have any properties to sell at Metropole, And that means the advice can be unbiased and independent. So if you want to find out a bit more about what's happening in your local market and what our research suggests is in store for us, why don't you come along to a free briefing in our offices in Melbourne, Sydney, Brisbane, or with our affiliates in Perth? Just click on the link below and reserve your place. Of course, I'm going to keep you up to date with how to take advantage of the changes that are happening in our property markets in future updates like this. They come out every fortnight, but in between, because there's so much happening, I put out a regular daily short blog. Just click on the Michael's blog link up the top there to subscribe to it. That's a different subscription to the newsletter. It just gives you my short daily updates, so I look forward to seeing you on the other side and keeping you up to date with those updates. Have a great week. Make it a great week. This is Michael Yardney.